Hey everyone, how's it going? Hopefully you can hear me and I've got everything set up correctly. And I think I've finally figured out that there is no same link that you can just revisit over and over again. It just changes differently. So if you want to consistently be able to just see where they are, I think the best thing to do is go to youtube.com/gamma pockets and click on live, or even at that home, it shows that we're live. So I think that's the easiest way to get the link every time. Of course, I will keep posting it in the Telegram channel, so you can always grab it from there as well. Now, um, Fridays are a little bit different. So this is our first Friday together. We don't look at the exact same things on Fridays because we have the weekend ahead of us and there's potential for news and for things to shift. So if we did everything on Friday, a lot of the things that we did would just get undone over the course of the next couple of days anyways. And so we have better information. And so a lot of the things that we would normally do in a post market, we would actually do those on Sunday instead. And in the real world, in the institutional world, what ends up happening is people will come in a little bit earlier and then combine that afternoon practice with the morning practice to get their day started or get the week started. Okay, so Fridays tend to be more of a review on what happened during the week, what we did well, what we didn't do so well. It's a time for reflection on how our trading went for the week. So hopefully you guys had a great week. Hey, Illinois grain farmer and Omar, great to see you guys. And so you're going to watch me do that process and also talk about a little bit about what we see ahead in the next coming week, or what we might be able to see coming ahead in the next coming week. So before we do that, actually, after this live stream, I'm going to be meeting a follower who happens to live nearby, and he's the one who alerted me to the fact that scammers are now using AI to copy my face, copy my voice, and scam people out of money. So I just want to remind you guys that I only have one official public Telegram. That is, and you can join that by going to tradingpub.com/Kane. I will never invite you to a public Telegram. I will never ask you for crypto. I will never offer to trade your money for you. I will never offer you returns. The only thing that will ever do is get you onto a webinar and perhaps offer you one of my services. Okay, so if it's anything other than that, it is not me. It is not me, and please don't give those people your money. I'm going to be meeting with Jefferson. Shout out to Jefferson. Thank you for making me aware of that. And also, hopefully, I'll get to see exactly what these guys are doing with my name and my face and my voice. So, one thing that we will do, and we might as well start out with, is actually go into that Telegram channel. And one thing that I've been doing and that will continue to do is giving gamma levels, gamma exposure levels, and calling out levels throughout the day, and using that to kind of help us gauge where prices are going intraday. So at the beginning of this week, July 7th, the first thing we said was that we were looking at 620, 621, but we didn't really see a lot of power in either one of like calls or puts. And then we said over here about 620. Okay, so 620, 621 was what we were seeing on Monday, and Monday ended up closing at 620.68. So we did pretty good on Monday. And then Tuesday, we said that we're a little surprised by how bullish everything was looking, but not too much later, we saw the bearishness come in. This was a fight between the bulls and bears, and we said, okay, we or no directional bias. That's what we were looking for. We could see some wild swings, but most part we were expecting a chop sideways. And so that day, is this Tuesday? Yeah, this is Tuesday. We just chopped back and forth. Nice, super, super flat. So gamma definitely helped us on that day as well. Then on Wednesday, we said 625 back in focus. And then we said 625 proved to be a strong resistance. And then that we were chopping between 621 and 622 and a half. But after we got FOMC minutes, we were probably going to see 623, 624. So on that day, we ended up closing at 624. Okay, so very good levels from gamma once again. And then Thursday, that was yesterday. So we said 625 back in focus, looking like another chop day, although it could look directional, or it could be intraday directional, but on a day-to-day basis, not so much directional. Is that the only? Yeah, I was pretty busy yesterday. I think that's the only level I called out yesterday. And yesterday we closed at 625.82. So not as close as the other days, but still very, very good level. And especially a lot of people were thinking yesterday, because there was so much bullish momentum, we actually made it to almost 627. And it wasn't until the last 20 minutes or so that we dropped from close to 627 all the way back down to 625 handle. So that gamma still did help us quite a bit yesterday. And then today, they talked about how we were split once again and probably chopped between 623, 625. And today, let's see where we. Okay, so looks like the high was probably around 624.85. Our low was definitely lower, but that was very early in the morning. After that, it was right here. Okay, so we did actually chop between 623 and 625. So far, our gamma levels have done great this week. And we're going to keep on shouting that out. So maybe that convinces some of you to join my Telegram channel. So in case you want to, again, that's tradingpub.com/Kane, and you can join that Telegram channel. I'll keep shouting out those levels. So far, our gamma levels on SPY, SPX on an intraday basis have been doing very, very well. Now, we did a little bit of analysis, post-market analysis. We landed on XLU and XLB being areas to focus on. Later on, we took a look at XLF financials. And then yesterday, we also took a careful look at Bitcoin, or specifically Bitcoin treasury stocks. So we'll take a look at how all of those did. So we'll take a look at XLU. XLU, we're saying that there's some resistance here, but if we could break above that, then that would be a sign of money potentially moving into XLU. And it does look like we are above that. We still have a little bit of overhead resistance, but XLU so far is still looking like there is probably a good area to look at opportunities. If we look at XLB, materials, we talked about materials before those tariffs announcements on copper, and I forget what else, maybe steel. Then, so definitely materials have been moving upwards, and this is a nice trend. You can see that it's sort of pulled back to that EMA 8 right now, but it's still very, very bullish right here. So materials is definitely still an area of interest for me. Financials, did we talk about that yesterday or the day before? I can't remember. In any case, financials flat, didn't really do much. And then Bitcoin moved quite a bit. It's moving parabolically, actually. So let's take a look at the actual ticker symbols that went onto our watch list, see how we're doing over there. And so yesterday specifically, I was talking about JP Morgan and I was talking about AXP. And I said, if these can show strength and move upwards, then I would be interested. And I said I'd be comfortable going in. If I couldn't watch the morning, I'd be comfortable just placing an order. But if I can watch the morning, I'm going to watch how they behave. So AXP, not an entry yet. It could become an entry next week. And then JPM. It's still looking pretty good. We want it to get back above that EMA 8 though. And so what's happened right here is that pull back to the EMA 20 chop sideways. We're seeing a very flat EMA 8. And so we're just going to wait for that EMA 8 or the EMA 20 to curl back upwards to match that MA 50. And from a gamma perspective, we said 290 was, we want to get above 290 in order to see potential for 300 or even higher. So we're waiting, we would be waiting on JPM as well. Okay, then we also took a look at Mara, Galaxy, and HUT in terms of Bitcoin treasury stocks. So Mara doing very well, gapped up, went higher, and then pulled back a little, but this is still very much a parabolic move upwards. We'd want to see continued interest in Mara going up into next week. Then we took a look at Galaxy. We say Galaxy, if it could get above that EMA 8, well, it did very well at one point in time, but pulled all the way back. But this qualifies. I mean, it's not great that it has that huge wick, but it did move higher, it did close above yesterday's high. So that is so far looking like it. I'll just call it an okay entry, okay, because of the wick on this candle. But so I'd be cautiously optimistic about going into Galaxy. And then we'll take a look at HUT, and then I'll see what you guys are saying because I don't want to ignore the chat. So HUT, a similar, went opened higher, closed a little bit lower than where we were. Why were we looking at HUT? I guess a continuation of this. I guess it was a pullback to, I'll have to review myself. I don't, because when I look at it right now, it wouldn't have been a strong entry candidate for today. So I'll have to review what I said about HUT yesterday. Okay, let's see what you guys are saying. We have 22 open positions right now, all of them from different guru signals. What do I think about that? I think that you've got to take a look at all your positions and see how correlated they are. Because with 22 open positions, chances are you've got a lot of correlation going on. So generally, in a small account or a single account, if you have more than 5 or 6 positions, you're going to start seeing a lot of correlation, even if you think that there's not. So I would evaluate that very carefully and just see where you might have multiple exposure to the same sectors, and then consider paring down on the ones where you have too much exposure. Same boat, not 20. Okay, Illinois grain farmer has a lot of positions too. I don't have the confidence to make my own trades, which is why I rely on several gurus. I just believe that I have many ways of thinking, and some are right and other times they aren't. Well, that's exactly why we do these post markets. It's like, are we in the environment for this type of strategy, that type of strategy? It's unlikely that all 22 of your positions were opened under very similar types of strategies, right? So unless you just subscribe to services that are all very directional or very income oriented, but even if they're very directional, are they trend following? Are they pullback systems? Are they breakout systems? There's a lot of different ways that it can be approached, and what type of edge are they looking at? So in the current environment that we're in, based on the analysis that we've been doing in the post markets all week, is we're in kind of a buy the dip environment. And in the S&P itself, it's just been chopping sideways. We haven't really gotten a dip to buy. So really, in this time period, we really shouldn't be opening a lot of new positions. We should just be holding on, waiting for that dip so that we can buy. So we can hold on to positions or we can take profit on positions in a chop like this, but it's not really the ideal time to be buying positions. And if you are buying positions, we would want it to be on a trend following pullback system. So if it's not that, then I would definitely be taking less exposure in the programs that are not a trend following pullback system, and then put more emphasis on the ones that are, and then check correlation on positions. Because if one guy says go into Walmart and the other guy says go into Dollar Tree, you're probably reasonably correlated. Or if you, so for sure, if someone says go into Dollar General and the other guy says go into Dollar Tree, or even Kroger or Costco, those are all very correlated. And so you just want to make sure that you're not doubling up or multiplying your risk and your exposure in any one place. I feel like I'm not getting anywhere. Well, when the market's doing this, it's normal to not feel like you're getting anywhere. Okay. So either you were participated in this slow melt up and you made some nice gains over here, or you're chopping sideways and you feel like you're not really getting anywhere. So it's a little bit of a patience game right now, depending on which strategies that you're in. Yeah. So right now is not a time of explosive gains. So you might be in some strategies that try to capture that, and their hit rate or their win rate will be lower during this time period. Even if they can deliver on those explosive gains, the entry opportunities should be reduced right now. Otherwise, that guru, whoever's running that service, is taking too much risk. And then even the ones that they're issuing, this is a natural slump in the win rates in those types of systems. Okay. All right. So yeah, as you continue to follow, you will start to develop your own practice, your own feel for the markets. So the way that everyone starts out, everyone is, well, the way that everyone should start out is by copying someone who's successful. Right? So it doesn't matter who, and I wouldn't copy too many people, right? Too many chefs in the kitchen type of idea. You want to pick one or two people that you really like and that you really resonate with, that you like their style, and then you copy their procedure until you master it, and then you can do exactly what they're doing on a daily basis. And then if you want to add things and change things and modify things, that's when you do it. It's the exact same thing with any process. If you were to go and do yoga tomorrow, and you've never done yoga before, you're not going to go and try to make up your own positions, yoga positions, right? You're going to watch what the teacher does and try and fail to do exactly what the teacher does, because you're not flexible enough yet, or you're not strong enough yet, or you think that their arm is like this, but it's actually like this, right? You don't have all the details yet. And then that yoga teacher will move your arm into the right position and push you into the right place. And it's going to feel super uncomfortable for you because your body's not used to being in that place. And then over time, you'll get more flexible, you'll get stronger, you'll be able to do the poses. And then you keep showing up every single day, you're going to catch on to the teacher's habits, and you're going to know, hey, we're going to do this flow today, then we're going to do this, and then the teacher's going to do this, and then the teacher's going to do this. And then you're going to know exactly what to do. And every once in a while, the teacher might surprise you with a slightly different twist, but for the most part, you're going to catch on to it. And then if you keep on going, then you might not need the teacher anymore. You can do your own flows at home, and you can do your own yoga practice. And if you keep on going, maybe someday you'll be the teacher at a yoga studio, right? So that's how the process works with anything in life. It doesn't matter if it's yoga, if it's jujitsu, if it's trading, if it's driving a car, flying an airplane or a helicopter. You don't make your own stuff up at the very beginning, right? You're always trying to copy exactly what the teacher is doing, and you're trying to do it the best that you can, but obviously failing at the very beginning to do it the exact same way. Okay, so it just takes time and repetition. Time and repetition. You'll get better and better at it. But don't try to learn from 20 people at the same time, because guaranteed they're going to be doing too many different things from each other, and then that's going to really mess you up. So you can't get a feel and get your own flavor of things until you've mastered the fundamentals and the basics of something. All right, so just stick with it. Stick to it. If you like my style, stick with me. If you like Roger's style, stick with him. 2 or 3 is kind of okay, especially if they're pretty similar. Like Roger and I we have reasonable amount of overlap, so it would be a problem to follow the both of us. But if you have someone that is like completely different, then I'd probably avoid. Just pick the one that you're more comfortable with, that you like the best. Okay. Okay. So we did very well with our gamma pockets. Our sectors still look like they're good and in play. Let's take a look at the individual stocks. I think we already started that. Yeah, we already did it with the financials. We already did it with the Bitcoin treasuries. And let's now take a look at our utilities and basic materials. So we looked at VST. VST not ready yet. It's still following. It is this one. Yes, a bounce off of here, then this would either be take your profit right here and leave a runner to see if it breaks out, or if you're okay with the risk or giving up some of your profits from here, then you can hang on a little longer and see if it breaks out. And if it doesn't, if it just keeps chopping sideways, then you close your position. So VST from the bounce over here would have already hit its target, and then you would sit and wait to see if it breaks out. Now is not the best time for that, because again, we're in an environment where the pullback is the highest probability. But at the same time, if the market pulls back and this breaks out, then it's going to exhibit extreme relative strength. So that would be a really, really great opportunity. So you can selectively take breakout opportunities in this current environment, just knowing that if the market pulls back and it exhibits strength, you're in great position. But if the market pulls back, then you're probably going to take a loss. So VST, I would call that not ready yet, but looking very promising. We're just waiting for that trigger. NEM, I said if we closed above that 60, then we'd want to get in. So today was a good entry. I actually entered into NEM myself today. I'm up a very, very tiny 3% on it. But good entry because that is the beginning to break out. So bounce off of this, beginning to break out. Then we got FCX. FCX just keeps on doing its thing upwards. If you're doing pull back to EMA 8 type of thing, so this EMA 8 is your long-term trend and the price is your short-term trend, then today was a good entry. But knowing that you've got to take profits pretty quickly, you don't want to hold on to this for many days. For example, if you took this entry, you probably wanted to exit up here or anywhere on this day and then avoid this pullback, although you could have had another entry right there, and then you could have exited just after just one day. So you get these quick little tiny moves, small profits, but they're overnight gains, so they can add up very quickly. Whereas if you're doing a long-term trend and doing these using EMAs instead of price, then you catch longer trends. So if this would have been the entry right here for the short term, EMA 8 reverting to match the MA 50. So you would have gone in, well, either you would have done it on this day, on this green right here, or you would have done it on this day. Either way, that's a nice movement upwards. You would caught all of that, or you would have done it 2 or 3 times, well, 2 times off of the EMA 8 right here. Okay, so 2 times this week. Either way, it just depends on your style, what you like more. Do you like to see those quick overnight gains, 1 or 2 days, 3 days, or do you like holding on to a position for a couple of weeks and seeing a nice longer trend develop? All right, so FCX is looking good. LIN, nope, not yet. So what your clue right here was that EMA 8 is still very flat. It didn't revert to the match that MA 50. So LIN is still a wait and see. Whereas that if this holds above the EMA 20, then that the MA 50 will continue to move upwards. It'll maintain its positive slope, and then you're just waiting for a bounce up that drags that EMA 8 up with it. So LIN wouldn't be ready yet. ECL broke down, so this would have negated our interest in it. I'm pretty sure I said that on this day. I said I need a green bar moving up in order to continue to be interested in ECL. So ECL is now off my list. I'm going to delete that. Now we got ball. Ball, we're chopping sideways, but this is kind of a bounce. If you're using the price as your short-term trend, but I do trade that way for a couple of, but I like the longer ones, 5-day, 10-day trades, because you can really rack up. You can get to triple-digit gains if you pick the right options. Okay, and then we also looked at PPG. PPG, yesterday was a good time to take profits. Today is a pullback potential entry because it pulled back right into support in both the EMA 8 and MA 200. So before I'm comfortable with this one, because this would also be following price as the short-term trend. So you would want to see that confirmation bar. You want to see a close or at least in the last hour to half hour of the day, you want to be above the open or above this high. And then that would be an acceptable entry, and then try to catch a quick profit just like this day right here. Okay. So overall, all the picks that we had this week, they're either just waiting for the trigger or they've already made some money. So our picks are doing pretty well. Whereas SPY basically just chopped sideways, just went this past week. So from Thursday, we closed at 625.34. Today we closed at 623.62, a tiny bit down, but really just a chop sideways. So overall, we did pretty well this past week, and we're going to continue. So what can we see for this next week coming up? Again, a lot will have to be determined on Sunday rather than today, but we can take a look at some big overarching overall themes for today. What would have happened today until the end of the day with our trade that we set up yesterday as a morning payouts program if we didn't set a stop profit? So Omar, again, I'm not really, because this is a public forum, I'm not really going to discuss program trades, but we can talk about that. You can send me an email. We can talk about that, or I can do it in a masterclass. All right. Okay. So let's take a look at what we can see. So if I'm going to focus on sectors, and I want to see momentum inside of this market, because we keep kind of just grinding higher, or this past week we chopped sideways. I want to see if, should we positively expect that we are going to have a pullback, because what has happened now is that we've chopped sideways into the EMA 8. So there's never a requirement that it had to pull back down. there was a requirement that eventually it is going to revisit the EMA 8, and eventually it will revisit the EMA 20, and eventually it will revisit all of the moving averages. But the longer the average is, the further down the road that is. And here we've gone and we touched that EMA 8. So it is possible that it could just start moving up from here and we don't get a pullback. So I want to see if I can get an idea of the likelihood of that, or am I still going to expect a 3 to 5% pullback? Okay, so I'm going to go here and I'm going to just take a look at the number of 90-day highs, the number of 90-day lows, okay, and 135. Okay, well, so yesterday we saw 514, and today we're seeing far less at 135. Now, 513 is not sustainable. And that means that that should have been a local high right there. And for a local high, it wasn't very high. It did not. So what that tells me is that 514 stocks are making 90-day highs, but the market is just flat. So that means they didn't have a lot of influence on the S&P 500, the overall index, which means that they were smaller market cap, or that that they didn't, even though they made a 90-day high, they didn't really go all that much higher. They're just kind of flat, were relatively flat themselves. Either way, that's not indicating a lot of force upwards. And then especially that today, not very few of them continued that momentum upwards. So that's not pointing to a very strong move upwards. The lows, 34, 27. So that didn't really change. So there's no real strong force downward either. Let's take a look at the 52-week highs. Yesterday, 325. Today, 115. So we're seeing a very similar phenomenon. So I'm at this point, that puts me more neutral, neither bullish nor bearish, because they did revert quite a bit. 135 versus 500 yesterday. That is a pretty big number. But generally, we wouldn't expect just a one-day pause and pop upwards. So either more sideways, or we will still expect to see that pullback. And then if I look at my sectors, sector. I'm just going to look for today only. I want to see what was emphasized in the market. So silver was up. Okay, that's kind of interesting. So let's see what gold, silver did. Down. Okay, so that means silver went up and gold either went flat or went down. So gold, silver gained. I'm sorry, silver gained on gold. So this is down. That is a little bit of risk-taking behavior right there. Okay. SPY gold. Oops. SPY gold. Flat. SPY silver should be down. SPY silver. Yeah, significantly down. So silver really caught a bid today. SPY TLT. Flat. SPY Bitcoin. This should be down as well. Yeah, down. So there's continued interest in Bitcoin, but what's interesting is silver. Yeah, there's a huge spike up in silver and big volume. So that's like instant parabolic. That is a breakout. So that is really truly a breakout right there. Okay, so what we would expect though is when something moves that fast, that extreme, we expect a pullback. And then from there, if it can bounce from there, that would be the more sustainable move. Gold went up 1.5%, but silver went up almost 4%. Wow. Yeah. So that, yeah, would definitely outsized move on silver. I wonder if there's any news related to that. No, at least not directly on TradingView. So that's interesting to note. So this is something that I'm definitely going to write down and keep in my mind when I evaluate on Sunday evening or Monday morning before the week starts, because I want to see if there's a driver behind this. Because if there is a driver behind this, then that can start to shift our sectors around. So it's a lot of commodities. Commodities really did well today. Gold, commodities, oil. That's really interesting. Defense. Okay. Actually, in my directional programs right now, I'm in defense because that is one of the sectors that I identified before we started doing these live streams that would probably continue to do well, even if there was a pullback in the overall markets. So yeah, defense is just continuing its melt up, all-time high today. So definitely strong relative to the market right now. And so defense is also an interesting sector. So I'm going to note that as well. ITA. Mags did okay, as did energy. Let's take a look at those. XLE. Okay. So breakout above the MA 200. I would wait for a pull. I mean, technically, you could say that this was a pullback. So then I would be waiting for a breakout over here before I got too excited about energy. And then SMH, very strong, very, very strong. Just like ITA. The difference, though, is SMH would most likely pull back with a market pullback. Now, if we look at MAGs, strong, little bit of a breakout right here. But again, if the overall market pulls back, it's probably going to be led by MAGs. So I'd be very, very cautious with MAGs at the moment. Agriculture, that's interesting. Utilities, we already looked at. Let's take a look at agriculture. Doesn't really move, 0%. What does this say? Oh yeah, 0%. Okay, yeah. So everything below that went down. So I'm looking for the strong sectors at the moment, so that this would be it. All right, so this is really interesting to me. The commodities, the oil, the silver, the gold, that's all fits within a theme. Let's see what USO did. All right, that's not really a significant move, but kind of interesting because price pulled back to that EMA 20 and bounced. So there's some resistance right here. That's a lot, right? A lot going on at this level. You can see over here, a lot of going on at that level. So we'll see if it can break above that. The thing about oil, though, is that there's that resistance. There's resistance at basically every single one of these lines that I drew. So I'll be skeptical about a long-term extended movement upwards in oil, at least at this point in time. And then DBC. Yeah, that is a gap up run breakout. It is a breakout and a pullback recovery, a pullback and move upwards, all rolled up in one. So if commodities are going up, that could have implications for inflation. And that could have implications for rates. Yeah, TLT coming back down. Okay, so this is another thing that I want to look at very carefully. on Sunday or Monday morning. So silver, commodities, and implication on inflation and rates. Okay. And it may not be anything because this is just one day of data. So it may not pan out into anything. But if I continue to see it all throughout next week, then that's something I definitely want to take a note of. Okay. All right. So that's basically our process for Friday. It's generally a much lighter and easier process than the rest of the week because we have to wait for more potential data to come out throughout the weekend. Okay. Any questions? Anything that you want me to go over? What's the difference between an iron condor and a dragon flight trade? Yesterday, I attended a class where they discussed these two strategies, except corn, beans, wheat, and flour. Yeah, because those are more part of the agriculture, right? So if I look at DBA, DBA didn't really do anything, but other commodities. So what you said is very true. Yeah. Okay. I've never heard of a dragon flight. It sounds like something that someone made up. Dragon flight options. Not telling me about video games. Still telling me about video games. Still telling me about. So it really does seem like something that they just made up. So I unfortunately I cannot answer because I have no idea what they're calling a dragonfly option strategy. How about Bito, Bitcoin? So Bito would follow Bitcoin. So yeah, definitely gap up right there. Why do we see a gap up in Bito but not in BTC USD? That's because BTC USD basically continuously trades as part of the currencies market. So it just continuously trades. So these don't close. Bito is a ETF, so it closes. So this looks continuous, but Bito has to catch up because at the open it has to catch up with BTC USD. That's why you see that gap up right there. But you can see if they should because it's a Bitcoin ETF. But if I compare Bito to BTC USD, you should have almost perfect correlation. Yeah. See, down, up, down, up, down, big up. So we have, at least in the short term, we have basically perfect correlation, and we should see it throughout because that's what Bito is supposed to do. If it didn't, then there would be a problem. So Bitcoin is strong. That's all I can say. The only thing that sort of concerns me about Bito is, Bitcoin is making all-time high, but Bito is a little bit below. So either their management fees are really high, or somehow those managers are underperforming. They're not quite getting the performance, excuse me, that they're supposed to. So I would be careful with that. So I start looking into maybe other Bitcoin ETFs to see if I can get better correlation. So for example, if we look at IBIT, that looks a lot better than Bito, right? So all-time high, right? So whereas Bito was kind of down here relative to this peak over here. So I would definitely prefer, just based on this information alone, I would prefer IBIT over Bito. Let's see. Yeah, that looks way better than Bito. And Bito is 22.72, IBIT 58. So it's not like super unaffordable. I mean, yeah, Bito is cheaper, but IBIT is giving you much better correlation to the Bitcoin market and or much better fee structure. Yeah. Canadian natural stocks have shifted back to strong momentum, but American ones are just bottoming at a long term. Any idea why investors are choosing the former over the latter? I haven't looked into it, so I can't really say. But sometimes we don't really care about why. We just care about the phenomena. The only reason why I would care about why is I would ask, will American ones catch up? Or will Canadian ones fall back down to match? Because at some point, they they should be matching. They can stay divergent for a while, but at some point they should converge. So if that why helps me understand whether American ones are going to go up or Canadian ones are going to go down, then that why is interesting to me. But if that why doesn't, then not interesting to me. But based on what I just said, I'd probably look into it and try to figure out why if I wanted to play uh, play the natural gas. I did notice I went into, or at least I was thinking of going into, was it CNQ? CNX, which I believe is exactly what you're talking about. Yeah, this is really starting to move. So what you see right here is what I've been teaching you guys over the past week is that from here, this is a positive slope MA50. That EMA came down right here and then started popping up. So yesterday and today were good entries for a medium term play on CNQ, at the very least to these highs right here, or CNX, sorry, CNX. So I think let's find out. Let's find out exactly what CNX does and whether they're Canadian or American. Premier independent natural gas and midstream company engaged in development of natural gas in the Appalachian Basin. United States. Pennsylvania, Ohio, West Virginia. So maybe the American ones are about to catch up. All right. So that could be interesting. Is it better or less risky to trade stocks than options if I have a larger account? If I only want to activate, if I only want the active one to grow by $1 or two, so I can take my profits. I'm not sure what you mean by the active one. And it depends on how you trade, Omar. So if I define my risk, then so basically when you go into a trade, you can choose your risk. This is probably something that most people don't understand. So this is a really great question. You choose the amount of risk you want to take. The market tells you what type of return you can get for that risk. So for the same amount of risk, can I get a better return in tech? Can I get a better return in bonds? Can I get a better return in whatever? Okay, so that is probably the more ideal way to think about and approach a trade or an investment. For the given amount of risk that I'm taking, how much can I be compensated? And so this is like considering your reward risk ratio or risk reward ratio, depending on which way you like to look at it. Okay. So what you're asking me is, do I have a better reward risk ratio on the underlying stock or on an option? The answer is almost always, like 99% of the time, you have a better reward risk ratio on the options. However, most people don't do what I just said, which is for the same amount of risk. They don't define that risk, number one, and then they don't equalize that risk, number two. So if you say I have $10,000 and I'm going to go into, well, let's just make the math easy and say I have $34,000 and I want to go into CNQ and I want to allocate $34,000 to it, then I can buy 1,000 shares of CN. Oh, sorry, I keep saying CNQ, CNX. Okay. Or I can buy a $1 option and I can buy 3,400 contracts and spend that 34,000. Well, I'm allocating the same dollar amount, but I'm not allocating the same amount of risk because that option has a very high chance of going down to zero, whereas CNX has a very low chance of going down to zero. It might go down by a few dollars, but it's not the chances of it going down to zero, but in the next month or two are very, 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 very low, almost zero. So you're not allocating the same amount of risk. And that's the type of comparison that people tend to do. And it's like, okay, well, out of that $34,000, I'm only willing to lose $1,000. Okay, great. That means C and X can go from 34 to 33 if I buy 1,000 shares. So how likelihood is what's the likelihood of that? What's my risk of that? Now I would tell you that it's reasonably high because that's only one ATR away. Random movement can take you out. But how about on the options trade? Well, if I wanted to allocate that same $1,000 of risk, then the proper way for me to measure that is risk of to zero. So I'm going to count on that option going down to zero. If I'm doing 1,000 or $1 options, that means I only buy 10 options. Okay, now I've equated my risk. But actually, my options are going to be a little bit better because I can get taken out randomly and lose $1,000 on CNX, but a move down to 33 isn't going to send my options to zero unless we're at the expiration date. Okay, so the answer is by far most of the time, if you're allocating your risk properly, then your reward risk ratios are going to be far better on your options than on the stock. Okay, but but that's a huge caveat because most people do not allocate their risk properly. Okay, active asset. If I only want the underlying asset to grow by $1 or $2 so you can make profits. Yeah. So again, you're going to leverage on your option. It'll be much more leveraged. So you'll make more money and then you will risk less, assuming you allocated your risk equivalently. Okay. For the equivalent amount of risk, your option in the vast majority of the time will perform better. And I'm just talking about simple calls and puts right now, not spreads or anything like that. But in general, in spreads, that's going to be true as well. Okay, good questions, guys. All right. Hopefully you're learning a lot. I'm not really seeing any other questions. So we'll end it there. I hope you enjoy your weekend. If you think of questions over the weekend, feel free to email me, kane@investpub.com. Watch out for those scammers. Okay. I'm not going to directly reach out and email you. And if you get an email from me, it's going to be from kane@investpub.com. And but you have to email me and I'll reply. I'll never reach out to you. Okay. And I'm never going to ask you for a crypto. I'm never going to ask you to buy anything through email or through Telegram or through anything else or any sort of direct message. The only thing you will ever see me do is go on a webinar and then share with you some of my programs. That's it. Okay. All right, guys. Have a wonderful weekend, and I will see you all next week.